Best time interval for trading. So today we're going to look at what is the best time interval or time frame for day trading. And as you can see, I'm pulling up a 2-minute chart here. And here are the things that we're going to consider. So first of all is let me arrange the charts here a little bit so you can see it better. So look at the high and the low. You can see it over there in the data box on the left. And that's one of the most important things that a lot of people don't consider. So the high of the bar is 121.60, the low of the bar is 120.61. So if we were going to enter above the high of the green bar and place our stop below the low of that green bar, then we'd be risking roughly almost $1. Okay, now if we put our stop below the low of the previous bar, the low of the swing, it's 120.39 now, as you can see there. So we have to take into consideration with our time interval, this is something, again, a lot of people don't think about, is when you choose your time interval, it has a lot to do with how much you can risk in a trade. I'm going to bring up a tick chart here as well to show you a little bit of difference because my previous video was on tick charts. So here you see the range of the bar is much more narrow. So the high of the bar is 120.84, the low of the bar is 120.40. So therefore, I'm only risking 44 cents on this. So if I have a smaller trading account, let's say that you're going to risk 2% of your trading account on any one given trade, then this time interval or this time frame for day trading would be better for my money management, for my risk management. And that is a very critical aspect of how to choose a time interval that a lot of people don't think about. So if we move this back on up, okay, let's make it up, let's make it 2,000 ticks. Now you can see that your risk is going to be more. So the high is 121.20, the low is 120.40, and therefore our risk now is, what's that, 80 cents. So this is one of the key elements. So a lot of people think that, there's, a best time interval designed by the trading gods, or what do all of the trading gurus use? What do the market makers use? What do the Wall Street cats use? And there's some kind of ancient Phoenician numerology that applies to this. Where here's another one. A lot of people will set their time frames, especially with tick charts, to a Fibonacci number, like that's supposed to be some magical number that makes the markets work better for you. It does not. It does not. The very first thing that you need to look at in choosing your time interval is how much can you risk on any given trade. So you start with your risk management and your money management rule, which is, and that's going to be different for each one of us, but let's say that you're going to say, I will risk a maximum of 2% of my trading account at any one given trade. Then you go look at these swing highs and swing lows here, and you say, okay, this is the maximum that I can risk, and start going through some time frames and choose one that matches with your risk parameters. Now let's look at the second factor in choosing a best time interval for you, and that is speed. So remember, this is for day trading, and so we have to look at this now and say, all right, how fast are these bars moving? And that's going to determine how much time you have to make a decision and execute a trade. That's one of the challenges of day trading, is the speed at which you have to make a decision. So look at the bars right now. Let's do a little exercise and see, okay, how fast can you make a decision? You've got to analyze the chart right now, analyze the chart, and see if this is moving too fast for you to make a decision. Would you execute and go long here? Let's say we're looking at a double bottom. All right, now, boom. That pattern's put in. Would you enter here? Would you go long? Or are you feeling too much stress? Is it too stressful? Is it too fast for you? Like, oh gosh, I don't have enough time to analyze this whole chart and make a decision. Oh, it's starting to get away from me now. And, the longer you have to wait, now you're going to be chasing the market. So this would be a problem with a very, very short time interval, is just the time pressure, which is one of the biggest pressures of day trading, of course. And now, not only getting in, but also then staying in. Wait a minute, now the bar is turning red. Should I get out? Well, don't have much time because, now, should I get out? Should I get out? The pressure's mounting. Maybe I should get out. Wait, nope, now it's turning green again. Does this sound familiar, by the way? This kind of self-talk? And oh, no, it's going in. Okay, I'm going to stay in. I'm going to stay in. But you had to make a decision there very quickly about whether to exit when the bars turned red and turned against you. Did you start to panic? Did you start to get fearful? And you don't have time to sit there and analyze. Now, imagine if you actually had moving averages, indicators, using multiple time frames. The more information you add to the chart, wait a minute, maybe we should get out now. Bars are turning red. I don't even know what's going to happen here. So, but you got to make a decision, right? If you're in a real trade now, if you went long and that little double bottom there, we got a doji. Uh-oh, now it's indecision, but oh, red, up, green, whoops, red, still red again. Uh-oh, green, oh, okay. You see what I'm saying? So you get the idea, especially if you've day traded live, you know this experientially too well. So if this is freaking you out or it's emotionally too stressful and you can't make a decision this quickly, this would be too fast of a time interval for you. And then you would just want to use a longer time frame. All right, and we'll squeeze it up here so you could see we're coming into that previous high now. So again, decision time. Do we think it's going to break through here? Do we think it's going to bounce off? Should I exit the long trade? Should I reverse and go short? And you've got to make these decisions quickly because the bars are going to continue to move and they're not going to sit around and wait for you to make a decision. Again, imagine you had some indicators on here. Imagine you're using multiple time frames. You got to look at all this stuff and make your decision. So some people can do it this fast. Some people can use time interval this fast. I actually can use a very, very quick time interval personally, but that's because I've been trading for decades. And I got my system down, and frankly, I don't have to think about it that much. It's become part of my nervous system now where I have pattern recognition. But if you're a new trader and you've got a checklist and you're going through it, step 1, step 2, step 3 to make your decisions, then this is going to be too fast for you. And then you go to a longer one. Now, remember, you have to balance this speed with your money management that we talked about in part 1. So you got to be both. It's not one or the other. It's the balance of the two. So in other words, if this is too fast of a time frame for you, and so you say, oh, okay, I'm going to go to a longer time frame, but then you see at the swing highs and swing lows of the time frame, well, I can't risk that much money. The range of the bars is too far. Then basically you can't trade that market. You got to go to something else. Okay, my friends, so those are a couple of things that a lot of people don't think about. For some reason, they think there's just some one time interval that is the best. And I don't know where that idea comes from, but this is the reality. One other thing that can actually help speed up your processing time in your mind to make a decision is instead of just looking at bars like this, actually they have a timing indicator, an indicator that you just look at and basically just tells you go long or go short. And I'm happy to share that with you. I share that with all of my viewers for free. Just go to indicatorwebinar.com and I show you how to set it up on your charts, how to trade it, and it's a shortcut. Again, it takes away a lot of the thought process of looking at so many different things. That's one of the power of some indicators. Indicators by themselves do not make you money, but that's why I don't just give you the indicator, but I give you education with, that's about a 40-minute recorded presentation, tutorial, absolutely free. And it shows you, okay, here's the pattern. As soon as you see this pattern, boom, you go in, you take the trade.